Hi, I'm Vipul Mittal, and in this session, I will discuss risk assessment procedures and performance measures. So, you are the auditor and you are performing risk assessment procedures to obtain an understanding of the entity, its environment, and its internal control. And this is required that you may assess the risk of material misstatement properly. For proper risk assessment, it is needed. Assessment of risk of material misstatement both at the financial statement level and at relevant assertion level. Now, when you obtain understanding of the entity, its environment, its internal control, this includes obtaining an understanding of performance measures. So you obtain an understanding of the measures used to assess the entity's financial performance. How the financial performance is assessed. What measures are used by management to assess the entity's financial performance? What are key performance indicators? So what are the key performance indicators? What measures are used by management to assess financial performance? And what are key performance indicators? Is management using ratios, various ratios to assess the financial performance? Is the management using net profit ratio to assess the performance? Is management using trend analysis to assess the financial performance? Is management using operating statistics to assess financial performance? Or is it comparison with competitors that is used to measure financial performance? What measure management is using to assess the entity's financial performance? What are key performance indicators? Are these key ratios or trend analysis? Or is it employee performance measures? Is it comparison with competitors, entities' performance compared with that of competitors? Or is it comparison with budgets, forecasts? How management is assessing financial performance? An auditor has to obtain an understanding of these performance measures. That what measures are used by management to assess the financial performance. And you need this understanding. This is essential that you may assess the risk of material misstatement both at the financial statement level and at relevant assertion level. This helps in understanding what are the performance targets. Are there any performance targets? Whether such performance targets create pressure on management. So there may be pressure on management to achieve certain performance targets. If there is pressure on management to achieve certain performance targets, then there is a susceptibility of financial statement to misstatement. So there is a possibility of a misstatement due to management bias or due to management fraud because there is pressure on management to achieve certain performance targets. And this may cause management to intentionally misstate the financial statements. This may cause management to take certain actions that may cause financial statements to be misstated because there is pressure on management to achieve certain targets, performance targets. These pressures, on one hand, help in improving business performance, but also there is a risk that financial statements may be intentionally misstated. Profits may be overstated, expenses may be understated, certain expenses may be incorrectly capitalized. Revenues of following year may be recorded in the current year because there is pressure on management to achieve certain performance targets. So the auditor assesses the risk of material misstatement both at the financial statement level and at relevant assertion level. And for this, auditor performs risk assessment procedures that he may get an understanding of the entity and its environment, including its internal control. And this understanding includes obtaining an understanding of the measures used by the entity to assess financial performance. What measures are used by management to assess entities' financial performance? This helps in proper assessment of risk of material misstatement. All right, students, do watch more videos on risk assessment procedures. We'll connect again. Goodbye.